The main fact of global markets this month is the sudden swan dive of the US dollar. Now, it doesn't seem to have been caused by a single event, although there is a sense that last week's World Economic Forum in Davos was a turning point for the world, and specifically for America's and the American dollar's global supremacy. But in some ways, the most important event might have been 13,000 kilometres away in Tokyo, where new Prime Minister Takaichi called a snap election and promised to suspend Japan's GST for 2 years. Japan already has the world's largest pile of government debt, so those who own it were not impressed with a huge tax cut. So they sold bonds, which sent rates higher, and with them the Japanese yen. And so the US dollar fell. And it also fell against the Aussie dollar. It's currently sitting at a 3-year high. And gold and silver both hit milestones. $5,000 an ounce for gold and $100 an ounce for silver. It looks on the graph like they have increased by about the same percentage, but that's a trick of the y-axis. Silver has increased more than twice as much as gold because, as well as safe haven investing and jewellery, it's needed for solar power and electric vehicles. And the result is that the gold-silver ratio is at a 15-year low below 50. Early last year, gold was 100 times silver. Tonight, gold is $5,100 an ounce and silver $109. The local share market returned from the long weekend with a decent rise, and not just because mining stocks followed commodity prices higher, which they did. Banks, retailers and Telstra also went up, in line with rises on markets around the world today and on Friday. And that's finance.